Hi, I'm Stephen King, CEO of GrowthForce, and today I'm going to talk about the business life cycle that every business goes through. You go through an entrepreneurial startup stage, an emerging growth stage, a sustainable growth, and a mature stage. And I'm going to talk about the GrowthForce services at each of those stages through the eyes of one of our clients who has gone through it all the way through. The first is the startup stage. Your goal is to prove that you have a viable business. There's a lot of normal fears that come there. You have fears around no clients, not having any work to do, being the first one to start the company, and will somebody buy what you want to do? You typically in those stages, you have everyone that's in the company is in one room. Or if it's a virtual business, you can talk to everybody every day. You also see every invoice that gets out and you pay it yourself. You see every proposal that gets generated and you're involved in pricing every job. That's the goal of that stage, is to keep your costs as low as possible, except for things that help you bring in new business or serve the clients that you've got. What you need there is a low-cost QuickBooks system to set up an infrastructure to be able to allow you to be able to grow your business, to give you a solid foundation for growth and accomplish your objectives. Now, normally, you have normal fears like cash flow, not enough time to do all the business because you're doing all the work. If you want to build something big, the reality is you've got to do it one step at a time. We call it raging incrementalism. You start writing checks from the checkbook you got with the bank, and then once you start getting clients, you got to start sending out invoices. And you want those invoices to look as professional as possible. So you need to have somebody who knows how to set up QuickBooks to really look that you're bigger than you are. You want to make sure that you've got an accounting system that can help you grow. You don't want to just use it to pay the bills. You want it to eventually be able to provide you with the reports that you're going to need later on to help you make data-driven decisions to increase profits. And you want to make sure that you've got a system that can help you make decisions, not just something that's going to be able to do bookkeeping. So for this client, they came to us to help set up QuickBooks, and we set up the invoicing and showed them and trained them how to use QuickBooks to do billing. We set up all the accounts to be able to pay their partners and make sure that compensation was recorded right. So when they paid people, they were in compliance with all the rules. But we also set up some custom fields to allow them to be able to get the reports they're going to need in the future. And what we do is we work backwards from the core 4 decisions that every business owner needs to make to help drive profits. And one of those 4 decisions is related to this client, which was an outsourced chief marketing officer. We added a lead source field. What that does was it allows you to be able to track where did you get each client. We also set up unit economics for management reporting to be able to see how much profit did they make on every customer, on every job. And then as they got bigger, roll that up into every CMO and roll that up into every city, every state, and eventually every region. We worked backwards from the decisions to be able to add a lead source field because they wanted to be able to know, where do we get our biggest clients? Where do we get our most profitable clients? Which marketing spends give us the biggest return on investment? And by setting this up at the beginning, we're able to generate the reports over the course of their life to be able to get to the next stage, the emerging growth stage. An emerging growth stage, your objective is to improve your cash flow, because this is the #1 reason why businesses fail. They fail because of cash flow. And the faster you grow, the more working capital you require. You got to spend money to hire people to do the work. And you got to pay them to get trained. And that's expensive. And you got to do all that before you have the work to do. And the faster you grow, the more working capital you require. And that's the #1 reason why businesses fail. And so what you need in this next phase is help with billing and collections. You need help with expense management and bill payment. And you also need help forecasting what your needs are so you can anticipate your cash flow requirements and get in front of the problems before you have them. The other thing that you need in this emerging growth stage is you need gross profit protection. What does that mean? It means that you need to have really good information about your pricing. Because the single biggest impact on profitability is whether or not you get your pricing right. And by setting up unit economics in the startup phase, you're able to look at every single job and to see, are you pricing your jobs right? Unit economics means you're able to see your gross profit per customer and per job. And by adding some custom fields, you're able to figure out the gross profit by lead source, by industry, by sales rep, by whatever way you make sales and marketing decisions. And what that does is it allows you to make sure that you're pricing your next job right by studying what you did on the last job. Did you have time leakage, that you spent time that you didn't get paid for, that you didn't anticipate? Can you build that into your next bid? Do you have project managers, or do you have other costs that you didn't anticipate that you can put into your next bid? Do you have value that you're giving away because your staff are service staff and they like to solve problems, so they just solve their clients' problems without you getting paid for it? If you get smart about pricing your jobs right by studying the profitability on the jobs in the past, you're going to be successful in that emerging growth section by being able to make sure that you solve the biggest problem, which is cash flow. Now, our client went to their CPA to get to this next stage, to help them with their bookkeeping needs, to help them improve their cash flow. They were not a startup anymore. The CEO decided that it wasn't a good use of his time anymore to do the bill payment and the bank reconciliations and the payroll and the sales tax returns. And he figured every CPA has bookkeepers, and every CPA can do bookkeeping. But what he found is this is not a core competency to do client accounting services, to do outsourced accounting department for a small business. Their core business is tax work and doing an audit. And what happened is he was left with one bookkeeper doing it all. And in tax season, he felt the crunch of not being able to get access to his staff when he needed them. The CPA firm had much higher value things to work on. And as the business got bigger, the risks got bigger. The decisions got bigger. The spending that he needed to make got bigger. But the biggest problem was that as he grew, the quality of the work wasn't there. Invoices weren't sent out on time because tax season, nobody was available. And the systems weren't set up to automatically feed information from all the different sources. So they're rekeying data and emailing information, and the billing wasn't being done right, which had an impact on the client experience and the partner's cash flow. So the partners came to the CEO and said, we need to find a solution for somebody that's all they do is help clients improve cash flow and take care of our outsourced accounting needs. And so they came back to GrowthForce. And what he found was in GrowthForce, he was able to help deal with the next need that a small business has, which is reducing risk. As you get to the next stage of growth, you're now so big, you don't see every invoice. You don't see every pricing. You don't see every proposal. And you need to have at your fingertips information that tells you whether or not you're pricing your jobs right or your cash flow is solid. But you also need a system of internal controls, checks and balances to make sure that you have more than one person taking care of your books. What most of our clients come to us, they find is they can only afford one person. But if that person is paying the bills and reconciling the bank account, you've got a recipe for fraud. And small businesses get ripped off at a much greater percentage for larger business because there's no separation of duties. If the person who's opening up the mail is also making the deposits and billing the customers, you've got a big opportunity for them to be able to take some of those checks. And what you need is to eliminate that risk of fraud. Somebody who's a really nice person who runs into some temporary cash flow problems and knows that nobody's looking over their shoulders. You can have a big fear of intentional or even unintentional fraud. And when you can't afford more than one person in your accounting, you're susceptible for that risk. And at this next stage of growth, sustainable growth, risk reduction becomes really important. So that client came back to us. And what we found was the transition went really smoothly. We were able to provide them with a complete outsourced team that they now build into their process of signing on new clients. What we do is we are the first phone call to the client to say, hi, welcome to our client. I'm in the accounting department. Our job is to help make sure your experiences with us is a success. And we walk through with their client how they pay their bills, when they pay their bills, what kind of supporting documentation do they need in order to pay our bill. And then we can build into our forecast exactly when they're going to be able to pay it. We also help reduce the risk of fraud on the back end, on the bill payment, because we use Bill.com. So the CEO is the only one who can pay the bills, and he can do it on their phone. And they can see exactly what the invoices are with a scanned image before they pay any bill. And then finally, because we set up the reporting system, they can see profitability by person, by team, by client, by invoice, any way they want to be able to decide which are their best jobs and which are the decisions that we need to make to find more clients like that. And that's what's gotten them to the last stage, the mature business stage. 9 years later, this company has gone from one guy who didn't have any clients to 8 figures in revenue, and now focusing on growing their profits, which is the 4th stage of business. You want to increase profitability by implementing a management reporting system. Actionable financial intelligence that will help you make decisions around pricing, around hiring and firing clients and employees, around spending money to increase money in your sales and marketing, what gives you the biggest return on investment, and decisions around how do you increase the productivity of the people in your organization. And you do that by management reporting, which is unit economics or cost accounting, allowing you to be able to see the costs of all the work that you do so you can see the true profitability of the work that you do. And we do that with a month-end close where we're going to recognize the revenue you actually earned, whether you billed it or not. We're going to record the expenses that you actually incurred, whether you paid them or not. So the profitability for the month is a true profitability, an accrual-based profitability for every customer, every job, every team, and the entire company. And that's what allows you to make data-driven decisions about spending, about hiring, about firing. But what I love is hearing feedback from our client about how we've helped him build his management team. Before, he used to look at his revenue, and he used to be able to look at his profits nationally, and he'd say, our goal was to grow 35%, and now everybody celebrates. What you realize is, one region grew 15%, the other region grew 50%. And now we're able to go back into QuickBooks and set it up to be able to show you management reports based on the way you're organized, based on the org charts, and to be able to see trends by regions, and to be able to give the managers who are making spending decisions the information they need to make those decisions. Because they get paid on the profits, the CEO no longer has to be involved in every marketing decision because everybody's aligned that their goal is to be able to get the highest return on investment. So we've enabled the growth of the management team by giving them information that helps them make data-driven decisions. So now the CEO just goes in to the QuickBooks file. After we trained him how to look at the QuickBooks file, instead of 2 or 3 times a week, he goes in at the end of the month, once we've closed the books. And he starts poking around and starts looking up the information that he wants. But he doesn't have the fear. He doesn't worry about whether the information is right. He doesn't worry about whether it's accurate, whether the data got into the right boxes. The information's correct. And if he's got a question, it's very easy to ask, how is this done? Because his GrowthForce team is extremely responsive. He told me his accountant responds literally in minutes because it's like having someone down the hall, except he doesn't have to pay for the hall. So in summary, there are 4 stages of growth for a small business. You've got to start as an entrepreneur in a startup where you want to keep your costs as low as possible, but you need to make sure that you're setting your infrastructure up to be able to grow. The second phase is the emerging growth phase. You need to focus on cash flow, on implementing best practices on billing and collections, controlling your spending, and forecasting your needs so you can get in front of them before they create problems. The third goal is you want to make sure in your sustainable growth, you lower your risk. You separate your duties. You reduce the risk of fraud, you reduce the risk of penalties, and you reduce the risk of making bad decisions because you've got bad data. And then finally, as a mature business, you want to increase your profitability, give your management team the information they need to make data-driven decisions. I'm Steve King, CEO of GrowthForce. That's the business lifecycle.